You've been told a lie, a comforting, foundational lie that underpins our entire society. You believe the money in your bank account is your property, that it's safe, that it's yours. This is the illusion of wealth. For most people, the truth only reveals itself in the worst possible moment. When the house is on the line, when the medical bill is due, when the dream you've worked your entire life for depends on one single transaction. And in that moment, you discover that the number on your screen is just a promise, and that promise can be broken. The deception begins with a magic trick, performed every second of every day. It's called fractional reserve banking. You deposit your savings believing it's being stored for you. But the bank is legally obligated to keep only a tiny fraction of it. The other 90% or more is immediately loaned out. That loan becomes a new deposit, which is loaned out again and again. It is a system designed to create money from nothing, all of it as debt. Your savings are not being stored. They are the seed capital for an inverted pyramid of liabilities, where trillions in promises are balanced on a sliver of actual assets. This brings us to the most shocking truth, the ownership lie. When you place money in a bank, you are not a depositor. You are a creditor. You have given the bank an unsecured loan. You have exchanged legal ownership of your money for a digital IOU. And as an unsecured creditor, you are last in line to be paid if the bank fails. In the 2013 Cyprus banking crisis, this theory became reality. To save the banks, the government didn't bail them out, they forced a bail-in. They simply confiscated a portion of the savings of every depositor. This wasn't theft, it was legal. It is written into the rules of the system, waiting to be triggered. But even if a crisis never hits, your wealth is being stolen by a silent thief, inflation. Central banks create new currency at will, diluting the value of every dollar you have saved. This isn't an accident, it is a policy. It is a hidden tax that disproportionately punishes savers and wage earners. It is a mechanism of control called the Cantillon effect, where new money benefits the rich and powerful who get it first, before it circulates and drives up prices for everyone else. It's why you feel like you're running on a treadmill, working harder just to stay in the same place. So, how do you exit a game that is rigged against you? You do not play by its rules. The first step is knowledge, understanding that the system is not designed for your benefit. The second is to differentiate between currency and money. Currency is the digital promise in your bank account that can be created infinitely. Real money is a finite asset that you own directly, with no counterparty risk. This means exploring assets that exist outside the system of promises. Tangible assets like physical precious metals, productive assets like property. And in the digital age, decentralized assets like Bitcoin that act as a bearer instrument, owned only by the one who holds the key. This is not about getting rich. It is about becoming sovereign. It's about trading the illusion of wealth for the foundation of true ownership.